Namaste, crypto aficionados and my fellow capitalists. I hope you guys are doing great. And I'm back again. And I want to talk about why I think that the Fed, right, will be doing a pivot, a Fed pivot, and that would lead us into the bull market. Now, I know you might be thinking that because of inflation and what's going on in Ukraine and all that, but I have a strong point, that I think validates my theory because you have to either stand on bullish or you have to stand on bearish for the next 3 to 6 months. And I personally stand on bullish after seeing and weighing all the information that I have at hand. And I want to share this information with you, right? So, the first things first, why I think the Fed will do a pivot or will be forced to do a pivot, in fact, is firstly because of the midterms, right? So if the Democratic and the Republicans, of course, there's only two parties in the U.S. and they have their midterm election, which is important, right? And historically, you don't go into a midterms with a bad stock market, right? You should be pumping, you should be rallying, and all that. So Senator Warren, right, worries that the Fed will tip U.S. economy into recession. Okay, so Democratic U.S. Senator Elizabeth Warren said on Sunday that she was very worried that the Federal Reserve was going to tip the nation's economy into recession and that interest rate hikes would put people out of work. Now, this is very important. So she says, do you know what's worse than high prices and strong economy? It's high prices and millions of people's out of work. I am very worried that the Fed is going to tip this economy into recession. Okay, the US Central Bank Chief Jerome Powell warned on Friday that Americans were headed for a painful period of slow economic growth and possibly rising joblessness as the Federal Reserve raises interest rates to fight high inflation. Okay, we'll come to that high inflation thing later. Okay, now Powell said in a speech on Friday the Fed will raise interest rates as high as needed, okay, and would keep them there for some time to bring down inflation that is running at more than 3 times the Fed 2% goal. Now, after this announcement, we saw Bitcoin dropping, right? Going down to 19, even 18 something, right? We saw that happen because the markets were afraid, right? Because there's not good news from the Fed. So he's saying that while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. Right? These are the unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain, Powell said in his speech. Okay? What he calls some pain means putting people out of work, shutting down small businesses because the cost of money goes up because interest rate goes up, right? So the money to borrow, the money is expensive because of the interest rate. You can't borrow cheap money, right? So this is said Warren, okay, whose views on the economy are often influential among progressive Democrats. So she is influential in that, right? In the DNC, okay? So Warren said inflation was high partly due to supply chain problems, COVID-19 pandemic, and the war between Russia and Ukraine. There is nothing in raising the interest rates, nothing in Jerome Powell's tool bag that deals directly with those, and he has admitted as much in congressional hearings, right? So she says that what he's doing, interest rate doesn't help the the fact of the nature of the fact that people that will put people out of work as interest rates go higher, as money becomes more expensive to borrow. Okay, so now we talk about another one, right? We talk about Cathie Wood, right? So in her she did an interview, right? So I think she did a thread also, okay, a Twitter thread, and she's saying that the Fed is basing monetary policy decisions on lagging indicators, right? Employment and core inflation. Leading inflation indicators like gold and copper are flagging the risk of deflation. Even the oil price has dropped more than 35% from its peak, erasing most of its gain this year. So what happens is that the CPI is a very plays a huge part, right, in what the Fed does, whether they tighten or loosen the monetary policy. So now the fact that CPI is going down, because a big part of CPI also goes in that takes account with oil and commodities pricing. So if oil and commodities goes down, naturally CPI goes down, right? So in that case, you might not want to tighten it too much, right? You might want to loosen that. Okay, so let's see what she says some more. She says that in the pipeline, okay, this you can read yourself, right? The Volcker thing, I'm not going to go into it, but what she says here is, in the pipeline, inflation is turning into deflation, right? One of the best inflation gauges, the gold price, peaked more than 2 years ago in August 2020 at 2075 and has dropped 15%. Lumber prices have dropped more than 60%. Copper down 30%, iron ore 60%, DRAM 46%, crude oil 35%. Okay, now what she's not saying here is that the US dollar is becoming stronger and stronger and stronger, simply because people like big countries like Russia and China, they are not using US dollars. So what you are seeing, right, is a flight, right, of US dollars into the USA, right? It's going back to its own country, because a lot of countries are doing deals with each other. You know, they are buying using rubles, right? They are buying using yuan, you know, and Russia just sanctioned allowing Bitcoin to be used, right, to work around the sanctions. Right, so Russia allowed Bitcoin to be used. That's huge news. That's huge news, right? So now, if you want to buy oil from Russia, you might need to pay in Bitcoin, right? So that's the future of that, right? But I don't know when they're going to start that. But with in relation, right, to the US dollars, the US dollar is getting more powerful, and the euro is going down. In fact, the pound recorded its lowest ever, 37 years low against the US dollar. So the euro is going to hell, right? So euro was created, to, of course, avoid conflict, right? They wanted all the European nations to become one bloc, and to avoid conflict and to fight and build NATO. And also, don't forget, they created the euro. So that euro was it was created to challenge the US dollar, right? But look at where is it now. So euro and pound sterling, of course, I think Britain has left the bloc already, the EU, the UK, the EU, the Japan, they depend on US, right? Because they are their allies. They are big allies of US, right? In fact, US is using Europe to fight the war in Russia. The war is America's war, but they are using Europe and to fight the war against Russia. This is what it is in reality, So the thing is that the allies now need US to start printing more money. The more you print, right, the more the inflation it would be. So they need the inflation to come back. So the cost of the USD, the price of USD goes down. It becomes weaker than it is now, so that it is cheaper for them to buy USD. Because you got to remember, they can't buy EU can't buy from Russia. They have to buy from Saudi or somewhere, and they have to buy it most likely in USD, right? So they need Powell to start printing money and bringing the price of the USD down so that they could buy it cheaper. Coming back to this, Katie Wood says, further downstream, retailers seem to be swimming in inventories which they could be forced to discount aggressively to clear shelves for holiday merchandise. So there will be a further reduction in prices because of the holiday season, and people want to put new goods inside there, right? So their old goods, their old stocks, they will just maybe cost price or a bit above cost price. So there's a further reduction in the price. Okay. The surprise could be deflation in the CPI and PCE deflator by year end. This is for US, of course, right? The Fed seems to be responding to COVID-related supply shocks spanning 15 months, the same way Volcker battled inflation that had been brewing and building for 15 years. I would not be surprised, she says, to see a significant policy pivot in the next 3 to 6 months. Okay, let's continue. Now, Robin Brooks, right? So Robin Brooks is a chief strategist, Goldman Sachs, part of the economists in IMF and all that. So he's saying is that the US is largely a services economy, right? So it's best to take the manufacturing slowdown, right, with a grain of salt. So this is manufacturing. So there was a slowdown, but he says don't think about this too much. But when services activity falls off a cliff like it just did, which he's referring to this. But when the services activity falls off a cliff like it just did in August, services PMI, that's a warning signal. Time for a dovish Fed pivot. Dovish means, of course, where you allow the economy to grow, to loosen the monetary policy, to start printing money. And we know what does, right? It pumps up our market, it pumps up the stock market, it pumps up our crypto market. It's all about that. Talking about that, I just wanted to say something. It's all about narrative also. Remember last month, in July, right, the FOMC meeting, right, where they increased by 75 basis points. What happened? People thought that, okay, they got it under control and all that. The market started pumping, right? The stock market pumped 10%. Bitcoin went up to 25,000. Our alts also went up. White Ethereum went up and all that. So, the money was coming in. So it's all about what they are saying, actually, what they are saying. When you say something like that, like last Friday, he was saying, when you say sometimes there's going to be pain and all that, of course the market is going to react, right? The market always does react. So it's what they want, it's how they are playing the game. But in this game, where they are moving to, it is going to bring pain for them only, for their party only, right? For the Democrats. At the end of the day, if they want to be elected, they cannot show a screwed up economy. So they will have to prop the economy. Now, Seabridge Gold Investor, okay, he says, the cost of being a US ally, the EU, UK and Japan will now likely have their own versions of 97, 98 Southeast Asian currency crisis until they either de-dollarize energy imports, right, economically collapse, or Fed pivots renew QE. There's only some things you can do, because if you are going to go into recession, right, and you know how they changed the definition of a recession, right, and how they used to say it's transitory, so they will try to all these kind of gimmicks and all that. But once the recession comes, that is going to be a problem. That is going to impact your markets. That's going to impact a lot, and they don't want like Powell doesn't want to be shown as that he screwed up, right? Like you screwed up under your watch. Well, no, he doesn't want that. He would probably want to make the market soar. If not so high, but still, at least show a good market, right, condition. So will be part of his legacy, right? So let me know what you think, and let me know whether you think that they are going to pivot or not. And please give me a like and subscribe to my channel, and please help me grow my channel. Right, so I'll see you next time. Thank you and namaste.